Hey guys, what's up? Hope y'all guys are having a wonderful New Year's Eve. Um, hope you're excited about bringing in a new year, 2021. 2020 was a challenging year for a lot of us. But with a lot of those challenges, it also brought a lot of opportunity and a lot of blessings. It stretched us, it made us better. So I hope that we can take some of these positive out of 2020 and take it into 2021. So let's don't stop with the momentum. So I want to go over patience in the market. Let me take some of these moving averages off. Like I told you, I like to start out with a naked chart first when I'm doing my charting. All right. And then I like to then throw the moving averages on just to get a sense of where things are at on the chart. So we're going to go over a few little Forex pairs today. And I may look at a couple crypto pairs as well. So we know if you've been looking at some of my videos, you know I'm big on retests. All right. So being a retest trader, not being caught in the breakouts. A lot of people rush into the market as soon as something breaks out, and then the trade starts to pull back on them, and then they panic and they jump out. So in order to prevent having the anxiety with that, seeing yourself up maybe $200-300, and then all of a sudden now you're down $50-80, you can panic and wind up jumping out of the trades early. So we're going to go over this Euro British pound movement. Let me get this. All right, here we go. So this is what they call a Bart Simpson pattern. It's the iconic hair of Bart Simpson. All right. Normally when this pattern starts to show, we're going to look for some pressure to the downside. And a lot of times too, you can go ahead and start looking in the market and you can scan for this particular pattern. If you start seeing it showing, starting to set up and, we get a drop, then you can anticipate. Now on this, I'm going to show you where there's two levels of market retests. And on this trade, you're going to see two levels, but we're going to go over the last one that just played out. Let's do this. Let's do a bar replay. And we're going to go back to here. No. Here we go. All right. All right, so we got a nice impulsive leg to the downside. Then we got a nice little correction. All right, and then we start to trend down. All right, this level was support. So we're going to go ahead and put our support line. All right, so we get a level break of support. All right, the aggressive trader would have took this trade right now. All right, where would targets be? Remember, we look left. All right, so this is where the targets be. So we're going to go ahead and put our target box here. All right, then we can go ahead and measure, and we can see. Really want to do it from here. All right, that's about 58 pips. It's not bad. All right, so we get rid of that. All right, If we take this trade, we want to put our stop loss above the candle that did the piercing. So your stop loss will go here. So if you want to, you can put maybe a trend line right here to represent your stop loss here. All right. And you can label it if you want. But once you get good at it, you don't. Let's sell. All right. Oh, I didn't mean that. All right. So there you go. You got your stop loss. It's a little crooked. But... all right, here we go. You got your stop loss. And in fact, let's go ahead and measure that and see what our stop loss would be. And there's other things you could do, but I do it sort of old school. We get here, and all right, that's about 16 pips. So good risk reward ratio. All right. So what do we want to do? If the price comes back to this line, price comes back to this region, we want to take the trade. Now, this level right here, it got close. Someone possibly could have used this to say, hey, I'm going to re-enter. I'm going to get back in, or I'm going to enter for the first time. All right. So you get a nice little breakout. We drop. We start the second candle was formed, made a move to the upside, and then we start to drop to the downside. All right. And then candle closed right here. All right. So if price comes back here, we're going to enter the trade. So we're going to start the process. All right. Okay. So now you're getting worried that you missed the trade. All right. But be patient. Right. Trading, Forex, stocks, crypto, it don't matter. Patience is going to win in the long run. You're going to have sometimes where price just get away with you and it never comes back. That's fine, guys. It's another train coming. All right. You're getting impatient now. You might have just jumped in the trade. All right. And boom, you jumped in the trade here thinking that, hey, I'm just going to go ahead and get in at this level right here and then watch what happened. 31 pips, you're down. So if you took a standard lot size, you jump it in, you're down $300, $310. All right. So you get, but we got our retest. All right. Remember we said we want to come back to this zone. We got it. Okay. Now, your retest zone could be a region. It doesn't have to be defined as the ultimate. Let me get my keys right. There we go. All right. So basically, yeah, price comes back into this region. We do it. And like I said, this person could have did it, but look what happened. They got in and then now they almost back to break even, which is fine. They may be swing traders, so they know they're going to get a little bit of drawdown. And if price comes back in this area, what they may do is they just may add to their position. Let's see another opportunity. All right, so we're in the trade now. Came back into this region. All right, this is the best we can do. All right, boom. Next candle down, we get a nice little rejection. All right. All right, boom. All right, so targets hit. Got a nice little impulsive to this side. Targets hit. Now, this possibly could be what? Another area of retest, right? So what some traders may do is they may look to take a long position to come back in here to test this area before we may have a continuation down to the downside. All right, now I need to put on the moving averages so you can see something. And we're going to rewind it again. Let me go back. So you can use confluence. All right, now we're going to use confluence. Confluence means you have multiple things that's lining up on the chart to give you a competitive edge. All right. We see right here we have the moving average. Normally when the moving average, and this is the 20-period moving average. So when prices below the moving averages, all three, it suggests that we are in a bearish pressure. All right. You can use your moving averages as moving support and resistance lines. All right. So if price comes back up here and touches this, or what we call it kiss the moving average, we're going to look to take the trade short as well too. Now, what's happening is this moving average is moving close to this retest zone. So that gives us a clue that it's a possibility that price will come back and retest this area. All right, here we go. I'm playing it. All right, boom. You see how it kissed it? Barely got there, but it kissed it. See? Price popped up. Boom. Kissed it. That would have been a key to take it short. All right. And you see how price respected it and took, had a nice little rejection. All right, see how it got close to it? Sometimes it hit it, sometimes it hit real close to the region. But this is confluence, meaning that this was an area of support. Whenever support is broken, it becomes the new resistance. And your moving average was sitting right there at the new resistance line or region, should I say. All right, let's get out of this. All right. Let's look at, I want to go over GPUSD. And I made a mistake the other night. I anticipated. Anticipation has killed me in all of my trading career. Instead of really just playing what's really given before me, I'm guessing like, oh, well, this is, it has to come down. Like it's too extended, and I believe I took the trade somewhere in here, anticipating for it to drop to this green zone. I never got that. I was looking for something similar over here. You see how it dropped? I was looking for the same thing here. But I went and looked at the sentiment report. All right. And on a sentiment report for the British pound, US dollar, it showed me something different. And I went against it. All right. So the retail trader right here, the GP, retail trader, the British pound, US dollar, retail trader. Sorry, guys. Ooh. All right. The retail trader data shows that 40.19% of traders are net long, with the ratio of traders short to long is 1.49 to 1. All right. If 40% are net long, that means roughly around 59% or so are net short. That means that majority of people were going short. Then in sentiment trader, we do the opposite. We look for that we're probably going to go bullish. So if more people are going bearish, then more than likely the asset will go bullish. If you got more people going bullish, the more likely asset will go bearish. And as I explained in other videos, sentiment trading is designed that the markets can only reward the participants that aren't the majority. The minority is always the one that gets paid in the markets, not the majority. All right. So when it comes to what we call zero sum trading, in order for you to be a winner, somebody has to be a loser, right? So where does that money come from? So I explain that in a lot of these videos. Okay. All right. So clearly we see right here, it says we typically take a contrarian view to crowd sentiment, and the fact that traders are net short suggests that the British pound US dollar prices may continue to rise. And I saw that and I ignored it, trying to outsmart the market, and it crushed me. All right. I'm here thinking like, nah, like this thing gotta drop. And look what happened. Let me show you how many pips it went. Eventually, I got stomped out, but look at this, guys. This thing moved 94 pips from where I was at. I just read you the report. Look at how many traders are short. All these traders' stop losses are where? Above in this area. So price came here, wiped them all out. And then what's going to happen next? The market's going to lure you in and thinking that this is going to continue to go up and long. And so what we want to wait for the reports to say that maybe over 50 or 60% of the market participants are now long. And then once we get that sentiment report, we will look to start taking this trade to the downside. All right. This is something that revealing you guys that they're not going to really explain this. Most traders don't know this. All right. And I've told you before, it's a lot of things in trading that needs to stay, really sometimes tightly sealed. I mean, there's some things that I do that I don't really talk about on YouTube as well. And why should you? The moment you start revealing all of your secrets and stuff, if you notice, it's people who have already made all their money in the world. They don't care anymore. They exiting the game and they're just going to give away their secrets or whatnot, how to do it. But then you notice something, it becomes oversaturated, right? Everybody got all these secrets on how to do business, how to do marketing, how to do all these other things. And then before long, it becomes saturation in the market, and how effective is it? If you have a competitive edge in how you do things, it's a reason why you have a competitive edge. So always remember that. That's why Warren Buffett, when he does his speeches and stuff, he says, hey, y'all can ask me any question you want, but I'm not going to really give you the deep, intricate details of how we really screen and do our stocks and things. He may give a little nuggets here and there, but they keep it tightly sealed. And they have a formula that's winning. Why would they want everybody in the world to know what they're doing? All right. So that's that on that. Let's look at some. Let's look at Bitcoin. Since Bitcoin is a major uptrend. All right. So let me see something. I could have sworn I had another chart on this. Let's see, BTC might be saved under another broker. It could be Coinbase. Let's look. Nah, I just want to save some of the stuff. I'm gonna try one more exchange. Thought I had some notes saved on the chart. Look at benefits. I don't think I did. All right, so we'll just stick with Coinbase. Bit stamp. All right. Okay, so we're in a We're in expansion state. All right. As I told you before, these are the areas of danger of buying. All right. You really don't want to buy in this expansion state. People who buy in this state right here are impulse investors and traders. Okay. Uh, they're the ones that get, burned. But what happens is they look at things like this. It's like, see, if I would have just bought here, see, I would be up. But you run the risk because this at any time this can, correct. And so what we want to do as traders, we want to wait for a correction. But more importantly, that's why it's important to be involved in the asset before you even get to this state. All right, we shouldn't really be doing any buying here. We did all our buying down in this area here. All right, before the breakout. But let's put some moving averages. We're far away. This for traders, advanced traders. This is concerning, but in a good way. It's concerning is because they know that it could be running out of steam. The further you get away from these moving averages, the more likely the price want to start correcting and come back down, which is really a good thing because it gives an entry point for people who've been patiently waiting. All right. I'm just going to throw some fibs on here, and I'm going to see some possible areas that where price possibly could come back to. All right. I'm not going to be worried about anything retracing until we surpass 24,774. Until then, I'm not really worried about anything. But that would pique my interest at 24,774. And some of the key levels that I would expect that price possibly could come back and revisit is this key area here between the 19 and 17K area. This is a key area only because we never got a retest. It broke this market structure right here. We never got a true retest. As you can see right here, we broke, and then we came back and retested right here. All right, we broke, like we still can come back and retest. If we retest right here, we could, and it shoots an upside, we could see it rally to go on up into the 30K region. All right. Now I want to show you something. And I'm just going to do it on a weekly chart. All right, here we go. All right, so this is the top for back in 2018. You see, we haven't retested. We're on a weekly. Very far away. Very far away. Let's see something now. This is not to say this is going to happen, guys. This is technical analysis. We don't know for sure, but we got to respect the regions. Anything can happen. So institutions have come into the game that have bought a lot of Bitcoin. A lot. All right. Could Bitcoin come back to 13? Yeah. Anything can happen. I'm not saying it will, but that's a key level to watch out for. Only because of this impulsive to upside. Look, nothing will ever continue just going up, guys. It's going to correct eventually. It's not healthy for a market to go too parabolic for too long. The more parabolic, the worse it crashes down. Bitcoin is here to stay. We're going to be here for a while. You're going to have a lot of opportunities. Trust me. I wouldn't try to trade this stuff. Anything, just invest, and especially look into the altcoins. And this is not financial advice. This is it's my opinion. I do not have no degree in accounting, macro and microeconomics, and no Series 6-7 license. So no. All right, we had this run up, so we want to get the target for this run up, and I think we've probably already hit it, but I'm not 100% sure. But I know a long time ago I had done this, and that's what I was looking for. I already had a chart that had these targets already, but it seemed like they have been deleted. Oh, yeah, targets. Yep, targets hit. So these are the targets we had before. And I want to show you guys, but I couldn't find the chart. I want to show you how accurate we can be using the fib extension tools. Like I said, guys, I got all this in the members area. If you want to join the Dark Horse Coins, I'll just bring it up so y'all guys will see it. I got the technical analysis in this particular in the group. I go in the members area. I'm gonna get back to the chart, showing you guys. All right, so we're going to the members area, just going to the videos. All right, see, technical analysis, guys, right there for you. All these videos will show you exactly what I do. All right, and a lot of you are going to become better at it. All right, so you check these out. You can join the Dark Horse Coins for this. Now, I want to do a bar replay because I want you to really see how you can be patient. All right, I want to show you the power of how we use technical analysis. All right. All right. So, and what we want to do, we want to get some potential retracement zones. All right. Here we go. What I told you, I said, look, when price is what far away, we get a little worried. We think that price can start coming back down, and it's healthy. All right. So this was at 7,008. That's one of the key regions we want to be in. We want to be in this region. We want to do a bulk of our buy in this region. If it goes below this region, then we buy more. But we don't buy here. All right. This gives us a healthier dose. Okay. Now, this is different. This market is different than back then because we have more institution, bigger money involved. So it may not correct that much. However, I won't really say it can't, because Bitcoin is on a derivative market, meaning that people can make money coming down too. So don't get too caught up in thinking that just because the institutions have it, that it won't come back down. You have to have these types of corrections. Okay. All right. So we take this off. We got our target. We take it off. We want price to come back into this region. We'll look to start taking trade. If it go lower, we may want to take more. All right. We normally just have a arrow pointing, and we don't have a time frame of when this will happen, but you sort of can. All right. You see all this, that's happening. All right. But we're going to also measure the next impulse that we just had, because if that's still valid, then we're going to go higher. All right. So I just want to sit back. Let's watch and let's see. All right, we're buying. See right here, we're buying some. All right, because it came back to our region, right? I want to show you something too, right quick. We could take this move down. We can measure it, and we can also get a downside target potentially as well. Potentially, sometimes you can do that. Doesn't always happen, but some traders do that. They put a region down here just in case. All right, that is it's negated. So we can see we don't know 100%, but some traders do that. I don't like to do that too much because the impulse was too large on the first run up. I don't really worry too much about breaking, but it actually could. All right, so we're doing pretty good. We in this region. We're doing a lot of accumulation in this region, so it's giving us a lot of buying power. I'm just going to speed it up so we don't be here all day because it's going to take forever. But so I'm just going to put it in the real time. All right, boom. I didn't mean to do it. I'm sorry. Let's cancel this out. All right, boom. All right, so we never made it down there, so that's what I was saying. We could have, but it's good. We'll just take that out. But you see how we broke? We all in this area. This is all the buying. We're buying all in this area. We don't want to buy in no other area. This is it. We're buying here, maybe getting a little bit here, but this is it. This is our loading zone. Okay. And as you can see, our targets hit. All right. So if I would have showed you this chart with these the targets up here, you'd be like, wow, how did they know it was going to go there? Because we measured this impulse. All right, now we can actually measure this impulse too, and we can get a higher target to the upside as well. All right, so every impulse counts. All right, so we're talking about 36,000 to 44,000 some change is the next target based off this move. But in order to get there, you're gonna have to what? You need some form of a correction. The corrections are great. What they do is it builds up steam. You know, if you're doing a bow and arrow, you're pulling it back. The shorter you pull it, the shorter the distance. The harder, the longer you pull it back, the further the bow goes. So always remember that. Um, so that's where we are in that. A lot of people talk about XRP. And you know, so I'm glad this now. See, this chart saved, and I'm glad we're on here talking about this. I did this weeks way back in earlier December. I said, look what happened. Look at this spike up, and look what happened. Price just got murdered, just crushed. And I asked you, I said, could we have another look what happened moment? And then boom, price just crushed. All right, to the same thing. This was even before the SEC allegations came about. We ain't know nothing about it. But I looked at the chart pattern and I say, look, this doesn't look like it's going to go anywhere anytime soon. And I think we're going to have a nice little pressure to the downside. All right. I do know that XRP they release over 1 billion XRPs into the market every month, and they're going to do that for 55 months because they got 55 billion. That's not good for liquidity of an asset. Can you imagine if Apple, Tesla was putting 1 billion shares into the market, it would crush the price. It's too what do you call it? Diluted. It's diluted. The community of the XRP, the community of the blockchain, they've been calling for XRP to unleash those 55 billions to be burned. They want to burn them. If the burning event happens, XRP could well go to $50 or more once the burning happens. I don't know if they're going to do it, but they don't have a choice if the community votes on it. So because XRP is on the blockchain ledger and it has to go through consensus and protocols, and it has to follow the community that votes on it. The XRP as the company cannot do anything about that. They would be obligated to burn those tokens. So if that happens, you can bet that XRP is going to be astronomical in price. Now, as of right now, with all that supply, that's why the price is having a hard time finding a strong footing and staying there. You also had a lot of insiders, so that's why the SEC is involved. The SEC is involved to protect the consumer. I mean, the client, the retail trader. The SEC was born during the Great Depressions because you had a lot of inside trade. You had a lot of gross negligence of people getting taken advantage of, artificial pumping prices and dumping, and people losing thousands of dollars, and these are people who really didn't have a lot of money. So when you take that into consideration, the SEC really came after XRP. They're not coming after them because they're deemed as security. No, they're coming after them because, for one, you're doing price dumps. You're raising money without properly registering your activity. All right. You cannot sell something on open market and benefit and raise money without going through the proper legal, ways of doing it. Basically, if I sold you something, I gotta pay tax on it, right? I gotta go through all the formalities of it, right? What if I could raise $1.3 billion and don't pay no taxes? Who can do that? The only people who can really do that is when you're going through funding rounds, when you're raising you're funding, you're doing IPOs maybe, all right, and you're working with angel investors, and then you got to be accredited. You see, all those things are different. So how do you get $1.3 billion raised for Ripple Labs, and where's the accountability for that? So that's what the SEC coming in at. They're not coming in here to talk about, oh, you're not a security. I mean, you're a security. It's not a judgment for that. So a lot of people are misconstruing that. All right. Some of the delisteds is probably because they don't want to. They don't know the legality of this issue. Okay, so a lot of people just playing it safe, and then some people have a theory that this is all planned and orchestrated. Who knows? I don't know, but like I said, it's not financial advice. You can take your own risk of what you want to do. I personally sold out a week or two ago, and I put a lot of it in Ethereum and some other coins. For that, my rebuttal for that was to basically be in a position that while XRP is getting their stuff handled, my money could be operating and being involved in another coin that's doing fairly well. So instead of having my money dragged down, I put my money to work. So some people tethered it up or put USD coin, stable coin. That's fine if you did that. But my whole thing was, if XRP good things come out, I get my position back. I mean, just buy it back. All right, it is what it is. I'm not tripping on it, but I just refuse to leave something locked up and something that is a little shaky at the moment. But that's just my thing. All right. So based off this impulse move back here in 2018, this is Ripple's target, $4.20 between $5.35. So we expect this. Hopefully, this chart does not get deleted. I don't know what happened to my Bitcoin, but you can see that I've already would have had, our targets. All right. We can do a soft little analysis and we can see where price possibly could go for XRP. We're on a weekly chart. All right, so this is the concern what I have with XRP. All right, so what's happening is, all right, you see this level. We got an impulse, all right, and then we broke this level, and guess what we're doing now? We're retesting. We're retesting this. If this is a retest that goes shorter, then that's going to be the issue. And could this be a bearish impulse that's gonna go to the downside? Is it gonna complete? All right. Let's see. Let's see what can happen. Could we see 5, 10 cent XRP? Now we don't want to use this one. We're going to daily. It's too massive. All right. What do you see? You see the Bart Simpson. Did we talk about that earlier in the video? The Bart Simpson, guys. Got a boom, bam. Look at this. We're underneath all the moving averages. This is not good. This means that more pressure probably is coming down. All right, look at this. We had this level of support. We broke. Now we're back a little bit above a retest. We can be looking to go even lower. Okay. We can take this measurement. We can see exactly where we possibly could go. All right. And around the 6 cent, 5 cent area, price could possibly come in for XRP. Some people say they want to buy and do more at that level. All right. If it does go to that level, I probably would buy. Uh, yeah. I'm gonna try to do another order video, and we can look at the order books. We can see how many people really are buying XRP. All right. We can look and see um, what what large institutions are maybe are doing that. All right. So that's what you want to keep your eye on. How much of the institutions are actually buying at these levels? All right. So be smart with XRP. Um, I've learned in the past, there ain't no sense of having thousands of thousands of dollars and then you sit here and letting it get murked on the way down when you could have at least secured some of your profits, or you could at least maybe tethered up, stable coined up, whatever you want to call it. Um, that's just my thought on it. But I believe that most people who are holding, you may be doing an injustice to yourself, because if it does go lower to these levels, you probably could have used some of the profits from the other run up to go in and almost triple, quadruple your holdings. Price do come back down here. I can unleash enough capital to where I can quadruple my holdings of it. So that's how you want to look at it. Like we literally could come in here and we can buy, we can get 100,000 to 200,000 XRPs if it comes into this region. So you best believe that a lot of people are going to be thinking like that, and they're going to be ready to load up. And then from here, we may see an astronomical move to upside. Or Ripple could just be in a nice little sideways trend. It could take forever to get down here. We don't know, guys. I mean, we can wake up on Monday and things just going up to $5. I don't know. The markets do whatever they want to do. All right. So our job is just to give a pretty good, decent forecast. If it play out, play out. But we got a plan for it. Don't play out. It is what it is. All right. So that's that, guys. I'm gonna wrap this video up. I hope y'all guys enjoyed it. Y'all be safe. Don't get too wild out here. Y'all protect yourselves. Wear those masks. Let's learn to live to see another day. If you got a stimulus coming in, do not be coming in here thinking that you should be dropping $600, $1,200 in on anything, stocks, Forex, even crypto. Nah, if that's only if you don't know nothing about this stuff. If you're just not getting into it, I say tread lightly. If you want to do 600, no, do 200. Reserve the 4. Put that 4 in savings. Just play with the 200. And let's say your 200 just do very well. That doesn't mean that it's now it's time to take the 400 and just throw it. Like, no, like be a little bit strategic and a little bit safe in capital preservation. Like, really start studying this and learn about blockchain. You know what I'm saying? Get understand all that stuff. All right. And in the members area, we do that. We got blockchain course. You learn about all that stuff. Like right here, you click on the course, you can learn about it. And you can see, you got a blockchain course. You do all that. You should be studying. If you're not in the crypto, if you're in the Forex, you should be studying. Use your demo. Whatever you got to do, perfect. If you know how to trade, you can trade with less money. All right. And then investing wise, you need to be, incremental investing and buying things that you really believe in for the long run. All right. So that's just my opinion. But don't get too happy triggered because you just got some extra cash flow coming in. You just can throw it in there and it's just going to do what it do. Because then you'll be one of those ones that get caught in what? A drawdown. And the reason why you get caught in the drawdown is because you don't know how to look at the technical analysis of the chart to understand the forecast, to understand how things work. You're bought in the hype of things. You don't want to buy in the hype of things. Okay. So y'all have a great one. I'm going to end this. Y'all be blessed. Be safe. This is Eric with Inspired Trading and Dark Horse Coins. Have a good one.